Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back, and thank you all so much for being here. This morning, we're going to take a look at exciting stock market news. For the first time in a few days, we actually have some notable earnings reports to take a look at, and then we'll look at the morning's biggest gainers and losers. If you enjoy this morning's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to check out the TipRanks Instagram for other great investing related posts. Okay, let's jump right into this morning's exciting stock market news. U.S. stock futures are once again in the green this morning. We had the Dow futures up 0.6%, S&P 500 futures up 0.53%, and NASDAQ futures up 0.31%. Investors are awaiting details from the Federal Reserve's meeting from these last couple of days. It wraps up today, and a summary and statement are expected at 2 p.m. Eastern Time, followed by a press conference with Jerome Powell at 2:30. Now, we just talked about Roku the other day with their new streaming sticks, but now Roku has also announced that they are launching an app for Shopify merchants to be able to easily and effectively build TV streaming advertising campaigns. The app is scheduled to launch in advance of the holiday season. It's primarily aimed at businesses having limited advertisement budgets and is expected to aid revenues by catering to the precise audience for the businesses. A statement from Roku said that this is a powerful and simple advertising opportunity for small businesses to reach customers at scale, just as Fortune 500 brands have done for decades. We're excited to launch an easy-to-use solution for Shopify merchants that drives brand awareness on the biggest screen in the home. Analysts rate the Roku stock a strong buy with an average upside of over 53%. Google plans to acquire the St. John's Terminal in Manhattan for $2.1 billion. The property will act as the anchor of the company's Hudson Square campus, allowing it to continue tapping New York's world-class talent, vitality, and creativity. The investment in New York builds on Google's plan to spend more than $250 million in 2021 on strengthening its New York presence. It also intensifies its push to grow its workforce into diverse communities as it looks to spur racial equality. The Google stock is rated a strong buy from analysts with an average upside of 15%. California-based battery maker QuantumScape has partnered up with a large automaker to evaluate prototypes of its solid-state battery cells. Backed by Volkswagen, QuantumScape develops next-generation solid-state lithium metal batteries for electric vehicles. As per the terms of the deal, the automaker has an option to buy battery capacity worth 10 megawatt-hours from QuantumScape's pre-pilot production line facility. When asked to identify the automaker, the company said it was a second top 10 automaker by global revenue. Analysts currently rate the QuantumScape stock a moderate buy with an upside of 40%. To help small and medium-sized businesses, Amazon announced that it is joining hands with Lendistry, a small tech-enabled lending company, to launch a community-based lending program called Amazon Community Lending. Under this program, small and medium-sized businesses will have access to short-term loans of up to $100,000 at competitive and affordable rates. The rates should mostly range between 8 and 9.9%. Notably, with this financing option, sellers can use the working capital to grow their businesses, efficiently manage their operations, and expand their customer base. The Amazon stock is rated a strong buy with an average upside of 26%. Now, moving over to notable earnings reports. In the pre-market today, we're waiting to hear from General Mills, and in the after hours, we'll be hearing from BlackBerry. Yesterday, we heard from FedEx, who came in with mixed first quarter results. This was driven by pandemic-related labor unavailability and supply chain disruptions. The company reported adjusted earnings of $4.37 per share, down over 10% year-over-year, and missing the analyst estimates of $5 per share. Their revenue stood at $22 billion, which was up 14% year-over-year, and just surpassed the street's estimates of $21.91 billion. Analysts are currently rating their stock a moderate buy with an average upside of 37%. We also heard from Adobe, whose shares slid a few percent yesterday, despite them reporting better than expected results across all segments. The company reported earnings of $3.11 per share, up 21% year over year, and beating the analyst estimates of $3.01. To add to that, their revenues climbed 22% compared to the prior year to $3.94 billion, surpassing the street's estimates of $3.89 billion. They also recorded remaining performance obligations of $12.63 billion, also up 22% year over year. Analysts rate their stock a strong buy with an average upside of 11%. Also coming in with better than expected results was AutoZone. They reported robust fourth quarter and full year 2021 results driven by a long-term disciplined approach to increasing operating earnings and cash flow. The company reported fourth quarter earnings of $35.72 per share, up 15.5% year over year, and significantly higher than the analyst estimates of $29.87. Their quarterly net sales grew by 8% compared to the year-ago period to $4.91 billion and meaningfully outpacing the street's estimates of $4.56 billion. Their stock is rated a moderate buy with an average upside of 6.6%. And lastly, coming in with solid Q4 results and a surprise positive earnings per share, we had SFIX. Their adjusted earnings of 19 cents per share massively beat analyst expectations of a loss of 13 cents per share and improved significantly compared to a loss of 44 cents in the prior year period. Above that, their revenues jumped 29% year over year to $571.2 million, once again exceeding consensus estimates of $547.9 million. The company also exceeded the $2 billion mark in annual revenues for the first time. Their stock is currently rated a moderate sell with an average upside of 4%, but we haven't seen any analysts reiterate price targets since this recent earnings report. So let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by SFIX. Under the ticker SFIX, they're currently up over 12%. Followed by Cheniere Energy under the ticker LNG, they're up 9.4%, and Sasol under SSL, currently up 7.5%. Our biggest losers this morning are led by Equitrans Midstream. Under the ticker ETRN, they're currently down 8.6%, followed by Arcade Quantum under ARQQ, they're down 7%, following gains of 26% yesterday, and the FedEx stock under the ticker FDX, they're currently down 6%. So that'll be everything for Wednesday's pre-market morning update, bringing you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always appreciate hearing from you guys. Thank you all so much for watching. I hope you have a fantastic Wednesday, and I will see you back here next time.